Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scouten, jumping into the charts on this August 8th. Starting off the new week, we have had some pretty interesting price action among the indices and particularly some individual stocks. Noticeably, the meme stocks seem to have lit a fire underneath, the names of BBY, Bed Bath Beyond, AMC, GameStop. They were on a complete tear this morning, which is, I do think, one of the reasons why we saw a large amount of more speculative money flowing into the market. As you can see here on the intraday 10-minute chart on the S&P 500, this is our pre-market trading over here where we had a little bit of a sell-off, rally, another sell-off. You did make a new low, but you managed to close above the pre-market low, which arguably led you to this massive rally. You made a new intraday high and actually a new weekly high compared to last week, and then it just started to roll over and cave and cave and cave. And ultimately, this type of pattern that we're forming now is actually a intraday bear flag. So it does point to the fact that more downside is likely ahead. And one of the couple of key levels that I'm watching is there's this intraday gap, which is now technically filled from our gap up this morning, which is really good to see. You never like to see a gap up and continuing to run, especially when the markets are already in somewhat of an extended state. So we filled this key technical gap. There is still another lower gap here around the 408, which I do think we will fill momentarily. Arguably, it's very likely we can fill it this week. But one of the key levels now that I'm watching on the S&P is connecting this pivot up here to this pivot over here to this was your original breakdown zone, your support zone over here where you get a pop and then you sold off again. Connects to this pivot, and this is a downsloping trend line, so we could arguably be forming this bear flag just underneath this level, where ultimately I do think it breaks lower. And roughly, if you had to calculate, the measured move of this bear flag pattern does take you down to this gap fill over here, so I think that is pretty likely that we can see that this week. So overall, pretty interesting price action. We do have a little bit of a wedge formation forming here, so you could get a little bit more consolidation and chop leading into tomorrow before we see that breakdown. But I do think, again, these markets are on borrowed time. Many stocks are into massive technical levels, and a lot of the strong names like Tesla, where you can arguably say that more of the investment money that flows into names like Tesla are the true believers in the company, and if you start to see that sentiment wane, that's when I do think the markets can be in a great deal of trouble. So let me just remove some of these intraday lines. We'll take you to the daily chart. You can see on the daily S&P 500 chart here, we're approaching that 50% retrace, which is this white line. The 50% retrace is from this high, your all-time high, down to this low. So you pretty much have retraced almost 50% of the losses to date, which is pretty impressive to note, considering that economic conditions are arguably deteriorating in many metrics. I mean, the labor market is stronger when you're just measuring the unemployment rate, but it does have weakness in the overall salary growth side and the labor participation rate side. So, and then when you factor in PMIs decreasing, still global tensions, there's not a lot of bullish case fundamentals to enable this market to go higher. But ultimately, you have ran into resistance. You filled this key technical daily gap. There is a gap here at 427. So there is the potential that we could have a float up there over the next 1 to 2 weeks. However, we have important economic data coming out on Wednesday, the inflation reading. I do believe the New York Fed put out some preliminary guidance as to what inflation will look like for the next 12 months, and it is showing a substantial decrease in inflation. So that's kind of where the sentiment is. But overall, on the S&P 500, I would imagine that we at least at the minimum during this, whether this is a consolidation period to move higher or whether this is just going to be a failed consolidation period that breaks down. I would argue at the minimum you have to come fill this technical gap at the 406 level before you have a chance at moving higher. So there is a little bit more downside to occur. And here's the thing that I'm watching. So this is an interesting trend line to watch. So it connects this pivot to almost this pivot low, this pivot high here, and a bunch of little chop. So you have been trading above this now for 1, 2, 3, 4, 5, 6, and today is the 7th trading day above this red trend line. And the reason this trend line is so important is because as long as you're above this, you are holding that bullish sentiment. However, the fact that you had your first initial pop above here, you have not confirmed above this trend line in terms of a bullish break since you popped up over here. So it's now been 7 days of trying to confirm a potential breakout above this key resistance zone, and you have not. And as a market technician, from my experience of 10 years in the business, I have noticed that whenever you fail to confirm above a key resistance level, the longer and the more duration it takes for you to confirm and get that signal for that bullish close above, the longer it takes, the more likely it is that this pattern will fail. So I think we're at a pretty important, inflection point in the markets this week. Yet again, yields are lingering on that head and shoulders neckline. So there's a lot of things to really take into account, but I do think the markets are likely to pull back at least to this minimum. And if we get confirmation below this red line, I do think the markets are very, very likely to head down for their next down leg. If you get confirmation above this neckline, which we failed to do on the last 7 trading days, then I do think you can at least attack this gap fill over here, which will put you in line with your 200 daily moving average. Let's take a look at the QQQs. So overall, tech has been under pressure today. The Qs were positive on the day, and they have reversed now, just down 0.4%, as opposed to the S&P's down about 0.15%. So looking at the Q daily chart, let me just erase this. You can see in terms of relative strength that this is relatively the same trend line that we're watching on the S&P 500. So with technology, you actually got that breakout. You had a little bit of 2 consolidation, and then you popped up, and you popped up again to get that confirmation candle to signal a confirmed breakout above this channel. Now, the fact that you have confirmed above this channel does lead the possibilities that you can attack this gap fill over here around the 330 mark. But again, if the S&P starts to continue to wane and fail that confirmation, it will inevitably drag the NASDAQ down. And the NASDAQ, again, is at a massive, massive resistance level. You have this downsloping parallel channel, which connects these pivots over here, this pivot over here, and now the pivot that you've just recently run into. And you can notice that you're trying to close above that trend line, but again, failed to do that. So at the very minimum, I think you come back to this support zone, which is your gap fill over here, your 314. You do have a daily gap fill over here around the 314 level that should technically be filled if these markets want to stage another potential rally to the upside. But overall, technology has been lifting this market higher. You have seen strength in the tech, especially the small cap tech plays, which is what has been lifting this market. And if we look at the IWM has been showing the strongest relative strength in comparison to all the major indices. So if we simply draw that trend line again, connecting this pivot low, pivot, 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 you can see you're trading well above that trend line. But the interesting thing today is that you did fill another key technical gap on the Russell 2000. So now it doesn't really leave too many gaps. You have a small minor gap over here. But overall, I think the Russell is likely to see a bigger sell-off in the near term, considering many of those small cap stocks have had significant run-ups from the low. So again, CPI could really shake up this market. I think that if CPI comes in higher than expected, obviously markets will sell off. But if CPI comes in lower than expected, then that ultimately might mean the Fed is going to be less aggressive. But honestly, I don't think that is going to happen. Even if CPI comes in lower, I still think the Fed really has to get some sort of credibility back and tackle inflation. And notoriously, the Fed is always late in terms of adjusting to the market data and signals. So overall, I think no matter if we get a positive number on inflation or a negative number, I think the markets are going to sell off either way. I think we're just waiting for that news catalyst, that potential signal to move lower. Let's take a look at WTI Oil. So on the daily chart, you can see we're still at support, trading in this parallel channel once again. We covered our SEO short over here in expectation that I think we get a float up to this $93 level, where I may consider dipping our toe into another SEO short. I haven't quite put my finger on whether I'm comfortable again shorting oil at this level, but ultimately, if the time comes, I will reassess. I do think your next big resistance will be this 93 level. If you get through that, you do have a little bit of a downsloping trend line over here, which again will act as resistance. But overall, oil was weak during the day, but it is closing up 2.3%. If we look at natural gas is displaying weakness today as well. It's down over 4.7%. Overall, this is still a topping formation in play, but nonetheless, the fact that you're still holding this major pivot low over here still opens the possibility that you can have a float up in natural gas, potentially to the $9 level at the minimum. There is a key technical gap fill over here around the $7.98 or $8 level. So overall, I wouldn't expect natural gas to roll over just quite yet. I do think at the minimum you get a retrace back to the $7.98, $8 level before starting the next down leg. But again, I'm not comfortable pulling the trigger on the natural gas short yet. In the event that it does have a potential big move, I do believe inventories come out on Wednesday as well, along with the CPI. So again, inventories can really shake up things and cause wild moves, and I'd rather not be down 5-10%. Off of a crazy swing in natural gas. I'd rather try to maximize that upside potential or downside potential in the event that we are comfortable shorting it. Let's take a look at gold. Actually, we'll first look at the US 10-year. The US 10-year is basically looking to start rolling over and closing back below this head and shoulders neckline. So again, if we look at it on a weekly basis, there's no real head and shoulders there. So we have to keep in mind that the larger time frame pattern is still going to hold the most strength and the most validity. So everyone is monitoring this daily head and shoulders topping formation, which has technically triggered to the downside, but we're in kind of this no man's land where yields are trying to recapture this upper trend line. There's a big struggle and fight going on right now, so it's still too early to tell what's going on. I'm in the camp that if inflation comes higher, which this is my thesis, I think we're going to get a surprisingly yet again an inflation number that does come down compared to the last reading, but I think it's not going to come down as much as the markets expect. Therefore, I think yields are going to shoot up a little bit higher, potentially negate this daily head and shoulders topping formation, and then that would give us another entry to start looking at exploring the bond trade again. Now, in the event, I think we could potentially see yields test this 3% mark. I would probably be comfortable picking up bonds again at that level, considering that's where we started picking up the UBT play. We still have our IEF, which is a 7 to 10 year yields, but overall that I'm just comfortable holding as an insurance hedge against the markets. But the big level for yields is going to be this downsloping trend line now. The question is, can we recapture and confirm above this trend line to give us that extra boost to move higher? The US dollar, same thing with yields. It's kind of had a little bit of a down day, up day, and now it's finishing relatively just flat on the day. It's down 0.16%. So it is technically a down day. You notice how you still are in this channel of consolidation. The interesting thing is you are making a short-term higher lows. We'll just have to see whether or not we can take out this next major pivot zone or test that area. If the US dollar continues to see a catch to the upside, that would put pressure on the overall equity market. Let's take a look at gold. Gold's interesting. Gold had a nasty reversal on Friday, just to be met with another beautiful update today. So gold is up just under 1% today, which is good to see. You are starting to, again, consolidate in this channel again. This is healthy bullish consolidation. The reason we're consolidating up at this 1788 level, this is a very, very good positive for gold, is you are into minor resistance. Your major resistance is at 1808. So the fact that if we can hold at the upper end of this range and continue to consolidate for a few more days, it is likely that we push higher through this resistance level. And that's kind of my thesis for gold, is that we will inevitably start to push higher over the coming weeks. Let's take a look at silver. Silver had a monster day today, so up over 3.8%. I mean, look at this short-term potential breakout. We were watching this bull flag pattern play out, and this is a classic bull flag pattern where you have a downsloping channel and it usually breaks to the upside. But you can clearly see you're into the major resistance over here. This is going to be a big level. Tomorrow is confirmation day. If silver can muster up a positive day, you have confirmed a short-term breakout. Not only do you have these major pivots over here, but if you simply take a trend line across here, connecting this major pivot to this wick over here, you can see how it is at resistance. So a big level for silver. I would have liked to see maybe 1 or 2 more days of consolidation before seeing this move up, but again, I can't create the price action. I just have to follow it and adjust accordingly. But it is good to see for our silver play, our SLV, because we are long SLV. So let's continue to monitor that big level for silver. If silver can confirm above not only these pivot lows over here and this downsloping trend line, then silver has a very strong chance of coming to retest these highs up here around the 22.32 level. So that would be a substantial run in silver, an additional 7.8% to the upside, which is honestly a very strong possibility at this point in time. Let's take a look at Bitcoin. Bitcoin obviously had a massive pop. It almost tested that 25,000 level again. It's looking like it wants to get to that 25,000 level, which would be the top of this parallel channel, as well as this major pivot over here. Whether or not Bitcoin sees that level over the coming days, it's really going to be dependent on whether or not the spiders and the NASDAQ hold up. If the spiders and the NASDAQ can hold up or even consolidate, there is a chance that Bitcoin can potentially move higher. But overall, I am not looking for any trade right now. There's no real short opportunity here. If you started to pierce through 25, I may consider a short, especially if we went up to like the 28,000 level over there. I may consider a short, but at this point in time, it's a no touch for Bitcoin. We just have to stand aside and monitor the price action as it comes. We did sell our Canopy Growth for a beautiful profit, as well as our Snapchat, so congratulations on those 2 winners. The reason I sold Canopy Growth today is because you are into resistance. You do have the 50-day moving average that you just hit today, so naturally you see some sort of a pullback off of the 50. And again, you are into resistance. Do I think Canopy has more upside? Yeah, I do think you can fill this gap fill up here around 349, but the fact that I'm seeing more bearish patterns and the fact that the markets are still in an extended state, if the S&P sells off hard this week or at some point this week, it's naturally going to put a tremendous amount of pressure on Canopy Growth, so we'll just have to monitor that price action as it comes. That's it for today's analysis. Hope all this analysis helps. Congrats on the winners. Stay tuned for more price action, and please give this video a big like or